Hello, my name's David, the Chief Market Analyst here at XTB UK, and today I want to speak about some big moves that we've seen in the pound in recent sessions and some events to look out for going forward. Now, before we look at the charts itself, I just want to talk a little bit about volatility. So if we look here, we've got the 1 month implied volatility of the pound US dollar. Now, I wouldn't focus too much on the specifics of how this is created or what the nominal figure actually means, but what you can see is comparing this to previous periods, this tells you how volatile traders expect the market to be going forward over the next month. You can see we're back up to the highest levels that we've seen this year, and you have to go all the way back to December and November of last year to actually see higher levels of implied volatility. Now, this bottom picture is the same but just zoomed out, so this shows the last few years of this, and you can see if we do get back up above that 15 level that we saw last year, then there's not been higher expected volatility in the market since the Brexit referendum itself back in the summer of 2016. Now, the reason for this big pickup in volatility has been a sharp move higher that we've seen lately. You can see the pound US dollar here has rallied strongly. We've gained around 600 pips from the lows that we saw last Thursday, around 122, all the way up to the highs just made in the last couple of hours, around the 128.36 level. Now, if we draw a fib retracement from the yearly high, which was around 133.80 that we saw back in Q1, down to those lows around 119.60, you can see that this move has really been quite significant. We smashed through the 23.6, 38.2 and the 50% fib, and the latest rally actually just today has tagged the 61.8 at 128.36. You can see this is the highest level that we had since around March time, and there's the reasons behind this is basically there's been growing optimism that a Brexit deal could be agreed upon between the EU and the UK. Now, just to show you how volatile this market is on shorter time frames, if we go down to just a 1 minute time frame to look very recently, just when I was preparing this video, you can see we got a very strong move higher when we moved up to that 61.8% fib. 128.36, and this was on the back of some EU source reports that the DUP were on side with this deal. So that means that the party were seen as likely to support this in the House of Commons, and therefore the deal had a better chance of passing. However, just a few minutes later, Arlene Foster, the DUP leader, came out and dismissed this rumour, and you saw a swift move back down lower. Now, these are very large moves. You can see in just a matter of minutes, we traded from 127.40 all the way up to these highs, around 100 pips in just 4 or 5 minutes sort of trade, before moving back down lower, then consolidating since. As is often the case with moves in the pound, what you see in the pound US dollar is often exaggerated in the pound Japanese yen. You can see we've had very strong moves to the upside here in recent sessions. The market's rated over 900 pips, and there's a possible longer term head and shoulders forming here. It's a little bit messy, not quite a textbook example, but you can see we have clearly made a strong break higher of late, and we have rallied up as high as 139.70. In areas of possible support, this region around 135.40 could come into play, but a lot of this will depend on what happens with Brexit going forward. Tomorrow, which is Thursday, the 17th of October, the EU summit will begin, where they'll see if the EU 27 can agree on a deal, and then if they can, it will be brought back for a vote for UK Parliament probably this Saturday, and then it would have to pass through there for the deal to actually be ratified. Now, it's not just the pound that's been impacted by these moves. We've also seen a broad move higher in risk assets. The German DAX, for instance, has had a strong push higher in recent sessions, actually hit its highest level of the year just today, and you have to go back all the way here to August of 2018 to actually find higher prices. One market that has kind of lagged behind in terms of indices is the UK 100, so that's the FTSE. The reason for this is there is quite a strong inverse correlation between the pound and the FTSE when we see sharp moves in the pound, and this sharp appreciation we've seen lately has kind of dampened some of the enthusiasm in the FTSE. So whilst we've seen the German DAX and US stocks surging higher, you can see recent sessions actually have been a little bit of real consolidation for the UK 100, and we still have a possible bear flag here after this sharp decline a couple of weeks ago, and we're now in this sort of consolidation pattern in a rising channel. If you are looking for shares that are impacted by Brexit news, you have to go down more to sector-specific stocks. House builders and banks are some of the most affected. We've seen large moves in Barclays and RBS, but I've just got a chart of Lloyd's here to give you an example. On Friday, when we got a strong push higher in the pound, Lloyd's shares actually rallied by 13%. It was their biggest daily gain in several years, and you can see the market has really took off in recent sessions. They were trading down around this 50 mark. They soared all the way up above 60, so an increase of more than 20% in just a few days trade. In doing so, the market's also moved back above the 200-day simple moving average, and there could be a suggestion here that the market is turning higher, particularly if we get a favourable Brexit outcome. Just one final note. Just if we cast our minds back to the Brexit referendum itself in June 2016, we did see quite a lot of optimism going into that, and I just want to draw your attention here to what can happen if we do get a disappointment. Now, I wouldn't expect it to be as big a shock as this and as big a decline that you do have in the pound, but you never know. And you can see here in just the 6 days before the EU referendum itself, we had a 7% gain. Pound US dollar raised from around 140 to around 150, and this was largely on the expectation that Remain would come out victorious. When the Leave side came out with the victory, we saw a very sharp move low, and we obviously got that huge plunge. So I say I'd be surprised if we got as sharp a move this time out, but it does give you an idea of how the market can get ahead of itself in pricing something in, and if there is a disappointment, you could get a sharp move back the other way. Okay, thanks for listening, and best of luck if you're trading the pound in the coming days.